Thank you for joining me. I'm Alex, and I want to talk about Match Group today. So what they do is not that. They run Match.com and online dating, and also some dating, but mostly online dating. And things I've never thought when thinking about this company was a market cap of $35 billion. That is just surreal to me. So, price is $131.60, which gives them a market cap of $35 billion, which seems high to me. Dividend is zero. They actually paid a dividend last year, but somehow, who knows? You would think that they're doing better during COVID rather than worse, but who knows? Current revenue $4.8 billion, which is up 10%-ish. Earnings $431 million, which is down a lot. Also, trailing 12 months don't look so good either. So that went down by 85-ish%. So things not going well trailing 12 months, which is a huge problem, but supposedly things are going to get better. And I've changed how I get the PE, so I'm not using the PE for the trailing 12 months. I'm using the PE as listed for the end of the quarter. I think that is better because the PE would have been 395 and the forward PE 330-ish. And I think these numbers are far more accurate, but I haven't made a final decision on that yet. Total assets, $8.3 billion. Total liabilities, $4.4 billion, which gives them a total stockholders' equity of $2.9 billion, which is slightly up. With earnings of $400 million, you'd think they'd be up a lot more, but, who's to say, really? Overall, also, risk factors. There are really no risk factors. Obviously, there's other players in the market, but it doesn't really seem like there's many other people trying to have the same business model. And I don't think that there's anyone that can match them at what they do. And that was not intended to be a pun. Anyway, so obviously there's other online dating sites that work much differently than Match.com. So I don't think that there's any external risk factors. Obviously, the market can shift, and it does that reasonably often. And so, maybe people finally figure out how to do things without Match.com. I just don't really think that there's any risk factors right now. So, overall, obviously growing market. And obviously, during COVID, things should be going quite well, especially if bars shut down again, because there's really no good way to meet people in the real world right now. So things should be going pretty good. And I think that they will recover quite nicely when things are over. So don't really see a problem there. Obviously, for a dividend investor, there's currently no dividend. I would expect them to pay a dividend again, since they had been paying one. Probably not this year, probably not next year, maybe not the year after. So overall, I really wouldn't buy the stock counting on dividend. Similarly, for a growth investor, I don't think the growth is quite significant enough to invest in a company like this, especially when they already have a market cap that far exceeded anything that I would have expected. So I think that their growth is quite limited at this point. For a value investor, on the other hand, the balance sheet looks pretty nice. The PE is a tad high. Revenue growth, if you discount the trailing 12 months, the revenue growth is quite nice. So when things go back to normal, I would expect that the revenue growth kind of returns. And overall, I still wouldn't buy them because the PE is just way too high, but I wouldn't blame people for thinking that this is a decent stock with a decent outlook and probably pretty decent growth coming. Again, I'm not going to buy it, but wouldn't blame people who have a long-term outlook as a value investor to buy the stock. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.